Good afternoon, everyone. Welcome to the daily market breakdown show. And today I'll be breaking down support and resistance as well as the psychology of the current market and what I'll be looking forward going into tomorrow, which is the last day of the trading day. And let's get into it. So right now we are continuing to look at this QQQ rising wedge, this tail looking line, resistance and support. And it looks like we have just been grinding up slowly on the top of this resistance, and we'll likely break out of this rising wedge pretty soon, probably next week, is my guess. And if you have been frustrated as an intraday trader, I totally get you. It's like this. For the past couple days, this is pretty much exactly what we've been getting. Complete sideways of chop within a range. You can see we gapped out yesterday, and all we did was just chop, 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 and closed within the range. Today, we also chop, 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 chop in the range as well. And that's very frustrating for both sides. And it's even more chop on the SPY if you zoom into it. So what am I looking at right now? I'm just looking at the rising wedge as my guide for now. And you can see we also have this rising wedge in the NASDAQ 100, which is the futures chart for QQQ. And it's a little bit more clear on the NASDAQ actually. And this pattern is also going to be breaking closer to end of May. So both of those will be my visual guide. And SPY is very, very weak. As you guys can see, we had another inside bar again today and pretty much went nowhere. 410 was the support that just never break. You can see and during the morning, we tested down here like 10 times and markets didn't want to go. The reason for that is because there was a ton of puts underneath 410. So essentially, market makers didn't want to pay those. So we held 410 and we tested it right here again. Exactly 410-ish, I think. Yeah, close to it. 410.27. And we didn't break again, so we bounced. So going into tomorrow, we'll likely see something similar again due to how low volume has been. You can see how all these volumes down here during the summer days back. Usually we have slow grind ups during the summer when there's nothing going on. But the problem is that there is a bunch of bad catalysts hovering around that could potentially come later this year. So it's not like the regular summer where during 2022, that COVID year where this market just slowly grinds up. You can see this part of the year where market just kind of like slowly grinds up in the summer while its volume is very low, and there was just not a lot of fear after things start to get after this range. When things started to pick up and we have more news on all the vaccines and all that things going on and there's less fear in the market, you can see we just kind of like just slowly grind up with very low volume. That's essentially usually what happens during these times. But we have a lot of negative catalysts coming up later in the year. We have recessions, we have a debt ceiling coming out end of the month, and inflation is still here. So it feels like market's just trying to be propped up by just a couple games. You can see in the heat map today, there is pretty much not a single stock that was up other than Google, Amazon, and Netflix. A lot of Tesla. I mean, Tesla is quite oversold after its earnings. It was down quite a bit. So balance is pretty normal for a stock. But then, so like today, actually, I was looking somewhere saying about 180 stocks actually hit its 52-week lows, which is insane if you think about it. While the market is hitting new highs, QQQ, other stocks are hitting new lows. That makes the breadth of the market very bad, and so you can argue from both sides, the bear side and the bull side. So if you're a bull, you can say, well, these rest of the stock will likely join these mega tech bull very soon. But if you're a bear, you can say these mega techs have been running up so much already that once they start pulling back or consolidate, then the whole market would just tank because they would just join the team bear of all the other stocks that's already down quite a bit. Right, so we're starting to see that a little bit. You can see in the chart where Give me a second. In the You can see how all these like dips, even though all these dips are getting bought up, it just doesn't feel like there's a lot of follow through. So just kind of like gets up and then there's no more buyers. It gets up and there's no more buyers. You feel it in the candlesticks if you're watching it live during the days. And essentially, that is kind of like what's happening right now. It's not a lot of volume. There's not a lot of buyers, not a lot of sellers either. And we'll just have to see once the pattern breaks. What do we get increasing bear volumes? Let's say we roll over. We want to see. We definitely want to see bear volumes if it rolls over. The bulls, for indexes, you don't need a lot of volumes. It just slowly climbs up, even if you have low volumes. That's one of the arguments for the bears, but that is kind of an argument from me saying that you don't need volume just based on historical price actions. You can see very low volume days with low VIX, the market can just go up, right, and slowly go up for a very long time. But if you are a bear, we definitely need bear volume come in for indexes to drop. And you can take a look at NVIDIA as well. NVIDIA, it's also in a rising wedge and it's slowly starts to weaken. You can see NVIDIA divided by QQQ. We're comparing NVIDIA to the QQQ, and you can see it's starting for the last 3 days. It's been weaker than the QQQ itself. So once we get this chart breaking down lower and it starts forming a downtrend, then NVIDIA will likely be a lot weaker than QQQ, which is pretty reasonable due to the size of the bounce NVIDIA has been doing for the past 6 months, or in that 7-8 months. It's been up 167%. And I'm gonna, if I had to bet on this, I'm not in it at the moment, but I would bet bearish. I would totally be shorting this thing, and I would likely want to see this rising wedge break bearish due to us making new highs. Essentially, the psychology of this rising wedge is bulls making new highs, absolute zero follow through due to nobody is left to buy. And short squeezes again. The only people that are buying up here are people that are shorting that gets squeezed out and they have to cover their positions. Because every one candle above the prior highs, there's just no more buyers anymore. And even after such a long sideways consolidation, all we got was this squeeze and a little bit of second squeeze, and then just sells off, which is starting to give me a topping out feeling. Because just look at this. It didn't even went sideways for that long. And then once we broke out, we just had a nice move. And this sideways should have given us a lot more juice in this action to hit 300, but it didn't. So now I am leaning definitely more bearish if I was in NVIDIA, but I'm not in it. So, yeah. So we'll keep watch on this guy. And if it started rolling over, then the semiconductor sector is definitely going to roll over. I am in a semiconductor short. ETF, 3x ETF, XOXX. So what made me get back into the short was this quadruple top right here I talked about on Tuesday, I think. I was saying if we continue to just reject there, we can easily just short once we get to this point and then set a stop loss above there. And you're risking very, very small. You're like nothing pretty much. If you just set it right above it, give it a little bit of wiggle room, and depending on your sizing position, and you can just hold it, take profit whenever you want. I'm looking to see if this level actually breaks when QQQ actually starts to weaken. QQQ just held. QQQ is helping SMH hold up. Otherwise, this would have already rolled over if QQQ started to roll over already. So I am in this XOXX, which is the daily 3x ETF of semiconductors. So semiconductor goes down 1%. Obviously, this short will go up 3% due to its inverse position because I'm shorting. And it's you don't want to hold leverage ETFs due to them being there's a decay. So the longer you hold, the more you'll lose. So it's good for short term swing trades and scalpings. Yeah, so that's all I'm looking at for recently, and you can see all these. It just doesn't feel very bullish at the moment due to all these breath. It's very bad. Negative. All the stocks are hitting 50-week lows, while it's just like 4 or 5 stocks hitting new highs. And so I'll be a little bit cautious if you're a bull. So if once like Amazon starts topping out, right, this doesn't look that good. I mean, Amazon needs to chill a little bit, even if it wants to keep on going, right? So when we get a consolidation pullback, let's say we just come back to this level, right? That's a very reasonable pullback, and if we want to continue, we need to pull back a little bit for it to continue if it wants to even hit a new high, right? So let's just say Amazon pulls back to here. Microsoft cools down a little bit, comes back to the 12 EMA, it's still looking line, pulls back a little bit. Apple as well, coming back down a little bit. Where is it? Give me a second. Apple coming back, chilling out a little bit as well, coming back to test this nice looking uptrending line. And well, where's QQQ gonna go, right? QQQ is not gonna be making up here if the only stock that are going up in the market is starting to take a little bit chilling. QQQ will likely break out of the bear, and if that breaks bear, then there's gonna be momentum on the bear side, and there'll likely be more follow through from all these big techs dropping a little bit more. So we'll see. Because if you ask me right now, how are we gonna break above this rising wedge and over this 330 resistance? You need to see Amazon hitting new highs, breaking this prior high. Apple going up higher into Apple is currently already in a sell zone, so it needs to break above this resistance of this area. And if Apple does that, we're pretty much in all-time highs, very very close to all-time highs. So I think that's a little bit less likely, and we also need Microsoft to go up another. How much Microsoft has been going up? Microsoft has been going up a ton, as well as in its sell zone. We have hit that sell zone in this zone area. See this 200 looking lines? We got there yesterday, and it's currently chilling a little bit as well. So it's a little bit cautious on the bull side, but if we do end up having a breakout on all of this big tech, then QQQ has a good chance of testing this 330. So we'll see. And there could be a case where we break up to the upside, hits 330. It's a fake out, grab some liquidity from the bulls, and boom, come back. That's the scenario that I'm very open to, that I also think is very possible. Market just likes to troll people and steal your monies, and that's the whole point of it. But so yes, I'm definitely open to both scenarios where we just roll over, or we definitely hit this 330, then we go over. And chances of us hitting here and breaking above, it's a little bit less at the moment, unless I do see some more volume coming in from the bulls. If we're just kind of chilling like that with volume that low, it's I don't think we're gonna get to this above 330. If I do see a change in the behaviors of the market, and that I think we may break 330, then I'll let you guys know. And as of now, so far this is what I'm seeing. And if you guys got any questions, feel free to let me know. And be sure to subscribe if you made it this far. I will see you guys tomorrow and update you guys over the weekend on all the big tech stocks. Microsoft, Amazon, Google, NVDA, what I'm looking at, and the charts, as well as natural gas. I'll be updating you guys over the weekend, and Tesla as well. And yeah, I'll see you guys tomorrow. Have a good rest of your day.